All right, hello everyone. Good evening. Okay, now so let's get this session started. Hi, Jeffrey. All right, on time and dropping a note and comment to say hi. All right, thank you very much for joining me this week. And we have topsy turvy 2 days. All right, now so I'm gonna quickly talk about it. All right, but before I start, let me get through the routine. So for those of you who are joining us for the first time, this is portfolio building on Fridays with Terence. Now, so the objective is we're going to take a model portfolio, which we have been building, all right, since I think 10 or 11 months ago, all right, and we will be looking for suitable stocks to sell portfolio put on. Right now, so what is exactly our strategy when it comes to building this portfolio? Right now, our strategy is to be very, very simple. We want to accumulate, all right, or make profits, okay, only on some of the best and the safest stocks available in the markets. Right now, so this goes to show that fundamentals are the key, right, in terms of our stock selections, right, or right, occasionally, right, rarely you see me do this, but occasionally, all right, we will look at the potential or the opportunity behind the stock in the markets, right? So once we spot this, okay, we will opt to sell put options, okay, on this stock. Now, so some of you will be asking, Terence, if you spot an opportunity, why don't you buy the stock instead of selling put options? Now, essentially, the way we sell portfolio puts does not make a difference, okay? But I prefer the benefit of not having or needing the stock to go up in order for me to make any profits. Now, so by selling put options, I don't need the stock to go up, okay, for me to make money on this trade. Because when I sell, all right, any put options, I'm going to collect what we call a premium for it. So I'm going to get paid for the time, all right, on the expiry of the option that I'm selling. All right, so as long as the stock does not collapse, as long as the stock does not crash, okay, by the expiry date, all right, my option will actually be scheduled to expire worthless, which means the value is actually zero. All right, so whatever I sell it for will actually end up being my profit. But on top of that, there's another way we can actually end up making money. Right, as the days count down towards the final one, right, time is essentially of value as well. So the lesser days there are without any incident happening, all right, there is what we call the time decay effect, all right, which means the premiums will also start to get lower because there are less days and less time, all right, left on this trade itself. Yeah, okay, now, so that's how we want to make profits from selling time, all right, which is essentially what insurance companies do all the time. Now, so the only difference is I'm actually not taking any leverage building this portfolio, right? Because in these sessions, all right, most of them, all right, or most of you who are joining us may actually not be from our community, all right? So if you're already within our community, you know, all right, exactly how to execute these strategies on these stocks to get a further benefit, to do it with lesser capital, all right, without any increased risk, yeah, all right, or all right, what kind of leverage you should be taking, all right, to increase your returns on these same trades itself. All right, so be very careful before you go ahead because, all right, before I start this session, the next thing I need to do out is, right, I will be discussing live trades that I'll put to the portfolio. All right, I may do some today, I may not. All right, I'm not decided yet. Okay, but any trades, any discussions that I'll be putting out, all right, should be taken from an educational purpose angle. All right, so should you want to take any actions on them, do your own risk assessments, all right, risk judgments, be aware fully of the risk before deciding to go ahead with any trades that I'm talking about. Yeah, okay, if you need to, please seek your professional advice before doing so. Okay, now, so now that it's done over here, let's get going. What I want to do right now is I want to talk about the markets. Right now, are they telltale signs of yesterday's correction? All right, now, number one, let's move to the markets right now and you see this. Number one, all right, there's absolutely no way of telling that the market was going to correct yesterday, right? Was there? Not actually, all right? There was only a small hidden sign if you managed to pick it up, right? Not that you will know how drastic the drop was, okay, but that the threat was actually present. Okay, now, so what I wanted to show you was this, okay, with this breakout move, it was very strong and there was very strong momentum behind this move. Right, so nobody would have expected a correction until yesterday. All right, now what was the telltale sign then? Right, the telltale sign was really this. Right, if you spotted, there's a very, very, very small telltale sign because it was not in the MACD, it was not in the stock price movements, or sorry, this will be the SPX, not in the index movement. Right, but the fact that these 3 bars over here, all right, or these 4 bars that you see, the last 4 before yesterday's correction move, right? What you have over here is this, right? What you have is a higher high, right? But you see a small little divergence on the RSI. Yeah, all right. I hope all of you can see that because, all right, that was the tell. That was the tell, all right, that the market was hiding behind some trouble, right? We all know that there was some panic buying, panic short covering, or whatever. Yeah, okay, that was happening in the markets. That's why we have this push higher, right? Which, you know, we have the breakouts over and over again. Yeah, okay, until yesterday. All right, and if you spotted what's happening recently, right, market is starting to dispose, right, what we call the risky assets. Now, what do I mean by risky assets? Now, if you've noticed, right, these stocks that have been enjoying a lot of love in the market, right, has been seeing some sell-off, right? So you see AMC, which is one of the meme stocks, going from 60 down back to 40 over here. Yeah, all right. So that's you know, selling off the risky assets. Now, same as GameStop over here, right, which has fallen from the high of 300 back to almost 180. All right, so that's a dip as well. But apart from that, right, you will realize that if you have joined me many sessions ago, right, these companies, the airlines, the cruise ships, right, effectively, they are literally bankrupt, right? They're bankrupt because they're losing tons and tons of money over and over again. They are out of cash, right? But, you know, they're banking and they're hoping on the recovery. Now, the market has been ignoring all these over here, right, until you see the double top, right? Can you see the double top over here? And after hitting the double top, right, there was a divergence as well. If you spotted over here, yeah, okay, this stock itself started cratering. All right, it created from 26 or 25 all the way down to 20 over here. All right, okay, and it's not just AAL, which is American Airlines, right? You'll see across the board with majority of the airlines in America as well, right? The same thing happened to Delta, all right? So you have the double top over here, right? And then after that, Delta literally coming off after that, yeah? Okay, and you'll see under CCL as well, but just to check my mic is on, all right? So CCL literally did the same thing, right? But before it cracked down, it actually did a false breakout to a high of 31 before it came crashing after that. Yeah, okay, now, so you see all these companies, all right, which are literally out of cash, right? Or, you know, on the verge of bankruptcy, right? Now, these are the ones that are being sold off, right, in the markets right now. And in fact, one of the darlings, all right, at the beginning of this year, right, Tesla, all right, has enjoyed a rebound, right, but started selling off in the last couple of sessions as well. Yeah, okay, so be very careful, be very wary of what's going on in the market, right? But on a flip note, right, this is actually healthy for the market. What do I mean when I'm trying to say this is actually healthy for the market? Because what I'm trying to say is market right now is exceptionally high. All right, now, so let's go back to the SPX. All right, market has been tearing on a new high, and everybody has been pounding on the table, right, for this bull run to be healthy, for this bull run to continue, right, market needs to correct. And yes, when market needs to correct, right, the companies with bad fundamentals should be the ones selling off, right? And that is healthy for the market because once we have this correction, right, and once we have hit it, perhaps dragging the market all the way down to back to this $4,200 level or 4,200 points level, right? Now, if the risky assets continue to sell off, right, then what's happening is you have a healthy market where value is driving the market, right? No longer hype, no longer euphoria, but actual value. That means companies that are making profits, companies that are fundamentally undervalued, right? They are the ones where money is going into, all right? And when that happens, all right, it's actually a healthy bull run all over again. So what we want right now is a correction. And if these risky assets continue to sell off, right, once the market finds the next support and the next balance, right, we may have, right, the rally which may push to a higher level after that. Okay, but bear in mind this correction move, right, if it's going to play out now, nobody knows, right? But when it comes, right, look for that. Okay, look for that. Okay, now, so we can actually see this RSI cycle all the way down because the last time the market did that, all right, the RSI actually cycled all the way down to about 40 before it started going up. All right, and yesterday it only brought it to like what, 60, 50? Yeah, all right, it still has some way to go if we get another sell-off in the markets. Yeah, okay, now, but watch very closely, all right, with, you know, the tie-in with bonds. Okay, because today, if you can see what's happening right now, okay, today's market rebound has something to do with the bonds, right? The bonds collapsed 1% today, all right? Now, when the bonds collapse, what it means over here, right, it's the opposite when it comes to interest rates. Yeah, okay, now, so yesterday or the last couple of sessions, the bonds have been tearing up, which means, right, that the interest rates have been pressing lower. Okay, but today, all right, on this rebound over here, on the correction over here, all right, what you have is the rates jumping back up. Yeah, okay, now, so we don't have that divergence over here, all right, or maybe we have just an itsy-witsy bit, all right, but if this continues to tear out, right, it may start to force the next correction move. Yeah, okay, because too low interest rates is never ever going to be good for the financials. All right, so that's why we've seen some weakness in the financials, right? And if that rolls over into the technology, because at the beginning, technology will love low interest rates, but when that effect wears out, right, and you start to have the technology starting to take part in the correction move, right, you can see how fast, swift, right, that it will come, just like yesterday itself. All right, so yesterday you saw how severe, right, a quick correction in the QQQ or the NASDAQ itself, right, can actually come about. Yeah, okay, now it reversed yesterday, so we have, like what we call, let's see if everything showed the same. Okay, not so much on this, but if you spot the SPX yesterday, all right, it literally closed right on a doji over here. All right, that shows you indecision. Right now, so if you don't understand candlestick patterns, right, it's just a form of indecision over here. The market is undecided, right, if it will continue to sell off or it should continue to push higher, right, because it opened, right, at a level, right, which is actually a gap lower, if you realize this, right, and then it went much lower, the selling continues, right, but then there was dip buying, which brought it back, right, to exactly where the opening level is, right, so it's a hard battle yesterday, all right, so the bulls and the bears had an equal fight. That's what it means. That's all a doji means of it. So we can see a continuation, right? If Monday we break past this new high again, right, the bulls are in control, right? But right now, this last high, 4361, is going to be the next resistance that we'll be looking at, right? Whether we're going to have a breakout or it's going to exhaust itself, right? And then potentially give us another divergence on the RSI, right? And then kick lower after that. So those are the potential risks in the market. So with that, all right, that's why I said I'm undecided if I want to add new positions in the market. If today we had another sell-off, I was prepared to take advantage of the second sell-off, second day of the sell-off, right, to load up one position, right? Not too many, just one, because it's still early into the sell-off. Yeah, all right. Now, I say early because the market can go all the way down to 4,200, right? At this level, I'll be more, receptive to opening up more positions. Okay, but at now, right, we're at the beginning of the sell-off. I don't want to be jumping in on too many trades. Yeah, okay, all right, now, so let's get moving, all right, and this is what we have right now, and let's check in on our position, shall we? All right, so I'm going to check in on our positions that we have open, all right, and then see if there's any managements that we should be doing. All right, so we took our profits on Baidu last week, which turns out to be right. Okay, it was a good profit over here that we took off the table, all right, and then we took it off Kroger as well, all right, so that was a good one as well, all right, and let's see Verizon, all right, so we have Verizon, right, which goes all the way to September, all right, so I don't see much movements we can do, right, because we just started it last week, all right, so I'm going to hang on to it, all right. We also opened a new Tupperware trade last week, so I'm hanging on to that. So it looks like there isn't really much that I need to do or I can do, all right, with the positions I have. All right, and let's just look at what JD has done. It's fallen off. All right, so Friday, this is today. All right, 1, 2, 3, 4, 5. All right, this was last Friday. We should have closed it out as well, but we never ever know. All right, we have never known this. All right, and my position lasts all the way to January. So like I said, I'm comfortable with it. So there's no reasons I'm still hanging on. Yeah, all right, I'm hanging on. All right, now, so that's what we have. All right, and yeah, we do have, I believe, a portfolio hedge. Right, I do believe we have a portfolio hedge right now. So with this portfolio hedge over here, we have until next week to handle it. All right, so I wanted to do the managements today, all right, but we have the bounce, so it will be unfavorable to do this. as you can see, all right, the VIX index dropped, by over $2 today. All right, that's like 12% because the market rebounded. Right now, so I won't be taking action on this, right? But the last day, all right, to close and then reopen, all right, a new one for a portfolio hedge will be on Tuesday. All right, you need to do this if you have traded it, all right, before Tuesday market closing. Yeah, okay, all right, so be very aware. Okay, now what I'm probably going to do is I'm probably going to buy back the 22 put options that we have sold, right, and then reopen a new, right, probably August. Yeah, all right, so we have the 14th of July, so we'll probably close that, and then we'll reopen the 18th of August, all right, which gives the market another 1 month. Right now, what this does is this: when the market collapses, the volatility is going to spike, right? So these options that I'm selling, right, whatever premiums that I've sold them for, right, will end up being zero. All right, so that will give me profits, right, not so much on a stock position, right, but as a protection on my entire portfolio. Because when the market corrects, right, the initial effect on all my stocks will be the first dip. All right, so my portfolio may see a dip in the valuations or the net portfolio value. Right, so the dip is going to be made up by these profits that I make on the volatility index. It also gives me, right, the security, okay, to actually go out there and load up my portfolio, because I know that when the market comes off, I have a position that will allow me to make profits. Right, so that's why we call it a portfolio hedge. Yeah. Okay. Now, so I don't really foresee any new positions that I want to take right now, because today all we have is like a technical rebound. All right, and everything is still very uncertain. All right, so I want to wait out before I load up any new positions into my portfolio. Right, and nothing shouts out at me today as well in terms of stocks, right, available for trading. All right, so I'll probably be one of those sessions where I'm not going to add on any positions. Yeah. All right. Now, so let's go to some questions since I see them. All right. So Bunched is asking me, all right, Terence, under what circumstances over here will you sell a long dated put options? All right. Now, so I think the qualification mark is this, right? How quickly, right, do you see the stock being able to make an up move? All right, so the reason why I decided to take a longer expiry position on JD, right, was the fact that it was paying very rich premiums, right, even all the way until January. All right, and this allows me, right, to have a position in this stock, right, without having to worry about owning the stock all the way into January. Okay, plus another qualifying material will probably be this, right? When you sell long dated expiries, right, you want to make sure that when you sell long dated expiries, right, you are selling it. Oh, portfolio is lagging. The platform is lagging, sir. All right, Bunche, look this. All right, when you're selling, not the trade grid. Okay, now when you're selling long dated expiries, you want to make sure that you're selling it on non-dividend paying stocks. Yeah, or maybe when the dividend paying stocks or the yield of the dividends are actually very low. Why? Because when you sell shorter dated, okay, now, and if something goes wrong, okay, you have to end up holding the stock. Okay, actually, when you hold the stock, you qualify for the dividends. Yeah, all right, so you see where I'm coming from. All right, now, so that's also additional income, right, that helps you recover from a bad trade or a bad position. Right, but when I'm doing it on a JD doesn't offer me any dividends. So by turning into a stock investor early, it doesn't really give me any benefit. Yeah, okay, so if there's rich time available, right, then I might make the decision to go all the way into January. Yeah, okay, all right, and at that point of time, okay, the consensus was also the fact, all right, that the whole part about China stocks not being very favorable in the markets, right, was playing on our thoughts as well. All right, so with that, I wanted to give this option a longer expiry, right, before having to take any actions on the trade. Yeah, okay, all right, so I hope that answers your question over here. If any of you have some further questions, I'll be more than happy to address them, since we are not going to take new trades today. Yeah, all right, now, so Tanya, what happens if you overlook and did not close the VIX before Tuesday? Now, VIX, it's I would say it's a little bit of a more advanced level kind of option trading, simply because there's complexity, right, behind the underlying asset. Now, why do I say there's complexity behind the underlying asset? Because, right? When you're selling the VIX, right? Now I'm just going to do a quick 5 minutes over here. I'm not going to elaborate, okay? Right? But when you're trading the VIX, okay? Now what's happening over here is this. If you are selling the 18th of August expiry, right? You are actually not trading this underlying price. No, you're not, right? Instead, what you're trading, right, is actually the VIX futures, right? So your August expiry, all right, it's actually trading, all right, under this one, all right, this one over here, all right, under the August expiry. Yeah, okay, now, and you will see something over here, all right? I'm not sure why it's not showing you the price, okay, but you can see clearly, all right, that the longer dated futures, right, have a higher VIX, right, than the ones that are expiring. So what's happening over here is if the market doesn't collapse, right, what you're doing now is you're selling when the VIX is at 20, your underlying is at 20, right? But if nothing changes, that 20 price is going to start going towards 18, which is where it is right now, right? Because that's how future pricing works. Future pricing may add a premium to it, but as the days come down, all right, it will get to the cash rate, which is, all right, what you're seeing on the VIX right now. Yeah, okay, so there's this disparity. Yeah, so you need to, understand this, right? That's why I say it's complicated. Another part, right? When you're trading the VIX, you might have already noticed this, right? That all the VIX contracts have a Wednesday expiry, right? Now you should see that as well. All the dates are Wednesday expiry, but, right? Although it's a Wednesday expiry, the last trading that can occur on this VIX options, okay? There's only options available, right? So the last trading that you can do on the VIX options, right, is before the market closes on Tuesday. Right, after Tuesday, the market closed, trading stops. But what happens is they will use only Wednesday's opening VIX as the settlement for the option. Have I got you confused already? All right, now, so Tanya, simply put, just don't let it happen. Yeah, all right, okay, now I hope that helps you understand it a little bit better. Yeah, okay, now, so any others before we call it a week over here? Because I'm not, it's one of those weeks where I'm choosing not to take any actions on my portfolio itself. I prefer to ride it out, be patient for a week before potentially, welcome Tanya, right, before potentially raking up more better positions, all right, probably in the next 1 week ahead of us. All right, I can actually see that happen. All right, hello Chiwi. All right, looks like you joined us late. So I will still give it a couple of moments, yeah, all right, but just a quick shout out over here, right, just a quick shout out, right, for those of you who have joined us during our special session that we organized for the 24-hour Q3 earnings season, which is going to kick off on the 23rd of July. All right, I've realized that my team informed me we have like 3 slots left, right, that's allocated. All right, so if you want in, all right, you want to jump in on the training materials, all right, and start assessing it, and then joining us on our onboarding session on the 23rd to be ready for your earnings trades, which begins on the 26th, all right, which is like 2 weeks from now or 3 weeks from now, all right, and learn how to clock anywhere from 20 to 30 to 40% ROIs trading earnings, all right, on stocks when they report them. Right, if you'd like to jump in on this live trading sessions, which we are organizing for Q3, all right, do send my team an email. All right, they would be able to provide you with the final slots, right, and you can register for them before they run out. Okay, all right, now, so please make sure you send my team an email. All right, they'll be more than happy to assist you after that. Okay, now, so I'll leave it up there while I wait for the questions. I do see a comment. Let's see. All right, hi Pangsin. All right, looks like you're late today as well. Right, so it seems like there isn't much questions, probably because most of you know the drills, or perhaps I've explained why I'm not getting into positions on new ones, right, in my portfolio for this week, all right, pretty well. All right, but whatever it is, all right, if there are no further questions, all right, I'd like to thank you very much for joining me once again on Friday. Okay, and this wraps things up for this session. A short one over here, right? We look for some corrective move to continue to happen in the markets, right, to bring us some better bargains on some of the good stocks out there, right, and we'll rake up some new positions into our portfolio, yeah? All right, now, so Desmond, all right, so Desmond is asking, what about Man U? All right, what about Man U? All right, we have a trade that only expires on the 17th of September. All right, this trade is only 1 week old. All right, the option expires on the 17th of September. All right, so Desmond, think about it this way. All right, you have just sold a put option last week. Right, it is 1 week later now. Right, and your option only expires like August, September, 2 months down the road. Right, does it make any sense to do anything right now? Right, if the answer is no, then that's it. Right, so the question when it comes to management of a position, all right, should always follow this guideline. All right, you have a trade. All right, have a look at the stock price today. All right, what do you want to do? All right, so let's do this process very quickly. Okay, now so MU. All right, so let's go with it. Right now, so 1, 2, 3, 4, 5. So we entered the stock when the price was here, all right, at 15.34, right? Now, so obviously in the last 5 days, these stocks have came down, right? Now, so the first question is this: when you entered the trade, what was the rationale behind entering the trade, right? And I explained it in our last session, right, that I was getting into a stock, right, and praying on the recovery of it, right? But the recovery has not happened. Right, the recovery has not happened because, right, the new soccer season has not started, right? Especially in the British Premier League, people are still talking about the Euro Championships. Yeah, all right. Now, so that effect has not kicked into the stock, right? The euphoria has not kicked into the stock, right? The recovery has not been seen, right? So we're just positioning ourselves, right? And the reason why I took that trade is because, right, I saw a limited downside, right, versus, right, a much better upside. Right, the stock has achieved some stability over here, right? That's why I picked the $15 strike. But of course, we have a breakdown. Okay, now, but when I do portfolio put trades, you must understand they have an investment purpose from an angle, right? So this is where, you know, it brings me to the same point where many sessions ago, right, Andy probably asked me about the what's the company again? MDLA, yeah, all right, where we did that stock based on its growth potential. Yeah, okay, now, so I was fully comfortable on holding the stock, right, or owning the stock if anything goes wrong, right? So right now, when I did the trade on Manchester United, right, I'm also having the same outlook, right? If anything happens on expiry, right, I'm more than happy to own the stock, right, and then look towards turning it into a profitable trade via just owning the stock and waiting for the stock price to rebound. Okay, or while I'm owning the stock, continue to sell call options, right, until I turn it profitable, right? So those are some of the ways where we discussed, right, when I was running the mini portfolio session, all right, on the entire approach. I believe 2 weeks ago, all right, okay, about 2 weeks ago. Okay, so you could scroll back and see the Facebook live sessions from 2 weeks ago, right? You see me run the entire mini course over there, yeah, okay. All right, now, so for now, we have all the way to September. There's nothing for me to touch on this position. All right, I'm comfortable with it. All right, that's it. All right, so that's why I'm not talking about it. Yeah, it doesn't mean, all right, that when we're an option seller, all right, every single week, all right, I have to be looking at a position. Right, the only reason actually why I should be looking at a position is to decide if I want to take any profits which is available early. Yeah, okay, so usually when I look at a portfolio position, right, I will do so because I saw a quick rise in the stock price. Because, right, options are like a risk asset, right? So when we sell it, the trade is this much. But once the stock started rising higher, right, the risk on this option that we sold, right, has drastically dropped. Agreed? Now, so when there's a risk drop over here, right, the pricing will also see a collapse, right? So we're going to end up being able to close the trade for a lower premium and take our profits. Yeah, okay, so with that in mind, right, hey, I will go look at a position today. I will see what I can do with it, right, and then decide if I want to take actions. Yeah, okay, so that's trade management for all of you. All right, so I will end with that. Thank you very much all for joining me again for another week, and I'll see all of you next Friday. Okay, next Friday. Okay, and have a good weekend over here. I have a big event tomorrow, all right, with Market Wise Asia. All right, so if any of you are joining the sessions, all right, I'll see you tomorrow. Okay, otherwise, I'll see you back next Friday. Okay, everyone. All right, have a good weekend, and I'll see you again. Bye-bye, everyone.